Hey, good day, everybody. This is Dennis Wilburn, the Active Trend Trader. I want to welcome you to today's session of On the Radar. We're going to take a look at a couple of swing trade setups that are happening and also scratch our head and about what the Fed was doing when it signaled it's going to raise rates. When? Twice in 2023. It's not like that's not long-term, outlook for the Fed. Anyway, it's kind of odd. I don't remember a time when the Fed said 2 years from now I'm going to raise rates twice. But we'll see what transpires. Let's go ahead and jump into today's session. And what's the first thing we want to take a look at? Take a look at your Investor Business Daily, and you'll see here Dow Jones dives after Fed eyes earlier rate hikes. Tough day for meme stocks. And as you see things, again, it's, to me, it's just a little bit, I won't call it odd, but it's interesting. It's nice that the Fed gives such a long-term outlook and projection, but the thing that kind of doesn't have me concerned, but there's a whole heck of a lot that could happen between now and 2023. So anyway, we are in 2021. So 2 years from now, we're going to raise the rates twice and the market dives. But did the market dive really that much? So take a look at it. The S&P, I've got a daily chart on the right, a weekly chart on the left. Things to be concerned about. Let me get my drawing tools up. Things I'll be taking a look at or keeping my eye on over the last little bit is one, momentum has rolled over, at least in the TSI and also on the MACD. You'll recall correctly when I was looking at this last Wednesday. Today is the 16th of June. I had made a comment about how flat that momentum curves were, and that was basically as prices continued to hit, kind of eke out some gains here, that momentum was not something to saying, hey, I'm going to break out and just go for gusto here. So now what do we have in the S&P? We have a failed breakout. However, price action is still holding above the uptrend line on the S&P. That's the big key thing. That's the big key thing. If it breaks that line, though, there's another line in the sand. So it's not like, and what you can do, if you want to, just draw this line here, across here. And let's just go ahead and extend that over to the right. If we can do that, to the right. And isn't that interesting? That second, uptrend line comes really darn close to the 50-day moving average. So I'm looking at that 50-day moving average being the potential, line in the sand where price actions may in fact bounce on there. That's what's happened once, twice, 3 times. Price action has respected that 50-day moving average. So that will, at least for the interim time being, be our line in the sand of where we anticipate a potential turnaround. Now, could a price action turn around prior to that? Sure it could. However, momentum does look like it wants to do a little bit deeper of a pullback. If we do pull back to let's say we do pull back to approximately the 50-day moving average, how much of a pullback would that be? A pullback of that amount is only going to be like about 2.5% to 2.5%. A more significant correction would put us down into I'd like to see a 10% correction. That would be really awesome to get rid of a lot of fluff that's in the market. That's going to put us down closer to the 200-day moving average, as you can see right there. So S&P, not a lot to write home about. It is still in an uptrend, folks. The moving averages are still stacked in a bullish direction. And the thing that we want to consider, though, is momentum has rolled over and shifted to the downside. Let me get up my other watch list here. There we go. So what's going on with the representative for the NASDAQ, which is the Qs? Similar type price action that we see on the S&P earlier today. Basically sold off. Breakout has failed. Now we are closing below that. We're still above the 8, the 20, the 50-day moving average, and the 34 should be in there somewhere. I don't know why the 34 is not there, but that should be in there also. Let me just double check that on my. I like to have that 34. There we go. Yeah, I did. I had that dead, and I was doing some presentations last night, and I took the 34 off of there. So there you go, the 34. That's a nice one to have. A lot of people do watch the 34, especially the day traders, and they, sometimes they'll make a stand at the 34. So it's a nice thing to be aware of. Similar type situation. MACD, histogram has rolled over. The TSI has in fact rolled over and crossed to the downside. Weekly charts still looking like they want to push up to the upper level. However, you can consider this a failed breakout / double top type of procedure. Where do I anticipate things going? Well, we've got the uptrend line. Price actually could correct down to there. And that's what it has done lately. It's dropped below the 50 quite easily and found support at that uptrend line. How far away is that trend line from our past highs? Take a real quick look. I'll traject down to approximately, if it was to fall at a regular, a little bit over 5%. So that's something to keep in mind. Not a lot to do right now. How do we want to trade this? I will identify places on my chart where it would be a good value. You want to, some people call it areas of value, where price action could turn around. Where is that? Well, anywhere at the 20, the 34, the 50, or down here at this lower uptrend line. Any of those areas could be places where it would want to turn around. I would be looking for a drop in my momentum indicators, and then a reversal candlestick or a reversal pattern saying, okay, this is where I want to make my stand and move. So that may mean pulling back down to the 20 to 34 or the 50, and then stalling on that drop and starting to bounce back up. What would be an excellent sign of, to go along with that is if the TSI actually sold off down here to the 0 line or close to it, and then bounce from there. There are on the TSI several areas to be aware of that tend to be levels of support. One is about the midway point, about the 20 plus 20 or the negative 20. That's one. And then the other big one is the 0 line, So let's just keep that in mind on the TSI. Next, Russell. Russell actually, what the Russell did today. Oh, that looks pretty interesting. Russell, that's an excellent hammer on the Russell. Now, is it a buyable hammer? That's the rest of the question that we'll have to answer as price action, again, breakout failed, didn't get up to the past high from back in March, so the breakout failed from this breakout here, and we are dropping down. Price action stopped really close today, look to your left, to where we had the move up of about 2 weeks ago or so. And it just happens to be right at the 20-day moving average. And similarly to the NASDAQ, the price action on the Russell has sliced pretty fast through the 50-day moving average several times here. So let's just, I would say the most conservative place to try to pick up something on the Russell is just look for it to do like about a midsection pullback and wait for the TSI and the market forecast. Got another market forecast. I've got the MACD on here right now to get down around the zero line or below, and then do a nice reversal up to the upside. So that's what we'll be keeping our eye out for. How much of a, just real quick, how from the high here to the low here? About 2%. What happens is it pulls back 50%. We're talking about a 4 to 5% move on the Russell or the IWM. Another way we can anticipate where it might go is just throw a Fibonacci on the whole thing. A Fibonacci from where? From this. You can either pick this low here or this low here. This is a significant low, although it was a quick up, down to a higher low, and then a move back up. Either is okay. I'm going to go ahead and grab that one, pull it up here to the highs from about a week ago. Where do we anticipate it going? I always like to see, here's the 50% retracement. It basically it's kind of co-located with the 50-day moving average, and in between the 38 and the 50, you have both the 34 and 50-day moving averages. Those are should be pretty strong. Could prices rip through those and drop more? Sure they could. And that's one of the reasons why I will oftentimes just throw out what I call the magic fib box. You get a little bit more than you would normally get on today's session, but what the heck. I can get the darn thing to draw in there. Let's see, let me grab it again. Fib box, which is there. And what that is, that is a box that tends to be where prices pull down to. 38 on the top, the 50 in the middle, the 618 on the bottom. And it's quite interesting that before Fibonacci started being used on charts, Charles Dow has actually observed that tendency of stocks after a significant run up, such as this, and indexes, that of getting a pullback into where? From 1/3 to 2/3 the amount of the run, which just happens to coincide pretty darn close with the 38, 50, and 618% retracement. So that's what we've got going on the Russell. Is there anything to just, there's actually nothing to do right now. We've got a little bit of cross messages here. MACD, the histogram turned over, and it's a learning lesson. The MACD histogram crossed over and dropped here on this day here. It came back up and retested on Monday of this week, and then is rolled over. If you want to, if you've got a well-defined level of resistance or something, it is okay to kind of take a trade off of those with either a option trade and then let things go up. One thing, just I'll throw this out to consider, is when the Fed meets. Oftentimes, after the Fed meets, there will be a rebound or a sell-off over the next couple of days after that. Why? It's because the indexes, are not the indexes, but the institutions and the money managers will have to digest what the Fed had to say and make their adjustments on what they think is going to take place in the future. So that's what we have going on there. So that's what I wanted to share with you on IWM. How about a couple of stocks to take a look at? I've got 3 of them plus an ETF. Actually, I've got 4. I want to go through these really quickly, though. Med is just dropped, basically doing a really nice pullback. Come on. right down into a past breakout area. Now it has not reversed. However, momentum is down towards the lower level on the TSI. It is in the lower reversal zone. Price action, though, is below the 50, below the 30, it's below all the moving averages. And so we would anticipate some kind of a move back up, but not, knowing exactly where it was going to go. But from down here, we're sitting at 270. The highs up there at 334 could provide an opportunity to trade it back to the upside. And we'll see how significant this breakout area was, where it broke out here. It's back doing a retest. And so what would I look for? I would look for a reversal candlestick, maybe a drop below this and a bounce back above it. However, since prices have dropped below these moving averages, those moving averages are in catching mode. And so price action just may basically drop a little bit, came back up, and then ricochet off of those and drop lower. Although it could, since this is one of the earlier moves back up, just bust on through those. On the weekly chart, keep an eye on in the middle section there. That's the 20-week moving average, which corresponds to approximately the 100-day moving average. That can also be a level of price support. But right now we've got PSI turning over, market MACD turning over, and then also we have it turned over and rolling here. So, but it's getting to a point where it may, take a bite and bounce back up to the upside. What's another one we have going on here? Another Riley. These were stocks that came out on the PowerRank Elite watch list over the weekend also. Riley actually looks a lot better. We basically popped up above the off of the 8, above the 20 today, after coming off of this low down here at $65. PSI has already crossed up. MACD has gone into positive mode, has not crossed yet, but we want to be keeping an eye on that on the daily chart. Where might it go from there? I'll back up to the past highs. And if it goes back up into the past high, at the right, past highs are how far away? About 12%. About 12%. Now, if they went on and broke out from the past highs, we'd be looking at probably about a 25 to 30% run on that. So that's Riley. Another one to keep your eye on. Both Riley and Med only have monthly options. So if you're an options traders, that's something you want to be keeping your eye on. Dix. Okay. Dick basically came down almost to the penny on top of the breakout zone, and it's putting in a hammer. All the moving out, all the momentum indicators are still pointing down. So we'll see if this bases here right at this breakout area. That's what I'll be looking at. Dix, on the other hand, does have weekly options, and therefore it provides you some additional options, if you will, to do a couple of trades that way also. So we'll look for a bounce back up into the 101 level. From a pure stronger bounce point, the breakout's good. However, we may just drive sideways until we hit, this happens quite often, until we actually hit the uptrend line, and then it would bounce up from there. So watch this consolidation. It is, Dix is still looking good. And so we'll keep our eyeball on that. Stock that I'm waiting, I want to do a bearish trade on this, is CAT, our good old buddy CAT. Now, my projection on this, ideally, I would like to see CAT roll back up towards Now this is the magic fib box, but from the other side. I would like to see it roll back up towards the magic fib box. There's the 38, 50, and 618. It would be corresponding with what the moving averages. The 820s crossed here. We've crossed the 8 and the 20 have crossed the 34, and we're heading down towards the 50. Looks like we may get a cross on that. So watch for any pullback up into the moving averages or the magic fib box. That's what I'm waiting for to jump on something to the downside. My projected downside, I have not totally figured it out, but it's going to be down here around probably about about 180 or so, about 25 bucks away. Matter of fact, I can do a real quick projection on that to give you an idea. And the way we would do that is, first I will show you that is I would measure the Fibonacci backwards. Going, what? What? Yeah, go up to the high here, that right there. Measure that down to the low. And then what that should do is, and that should populate, yeah, there it is. It populated going down. Crossed here. There we go. Okay. So I measured from here down to here. I think I did that wrong. Let me take that back. Is I'm going to measure from here up to there. And that'll give me my projection down to the downside. There we go. And that took off. There you go. They're starting to give you a projection down to the downside. And what that was, it was measuring from here up to here, up from this low up to the high, and then it projects your extensions going downward. And that gives us, if we do a complete 100% run, that would put us down to 184.80. So I feel pretty good. I said 185. That was an eyeball projection. So not too bad. What we may get with the this here, and so what we may get is if CAT is in fact just extremely weak and it's not going to give us a full bounce in here, watch it to put in a what I call a horizontal flag. Here's the flagpole. Here's and then we may just drive horizontally there, and if we break out of that bottom there, that'll give us a projection down, and it will be the length of the flagpole down that we just measured with the Fibonacci. So last but not least, I'm going to throw in one other thing. If you are following us with our autopilot trading system, you're probably very much aware. We have an autopilot leverage ETF system, which I put out these kind of alerts every weekend. And normally we have about two orders that we put in, and then today we had two orders this week. One on the leveraged ETF for XBI, which is LABU, and then we have one on Gush, which is the leveraged ETF for XOP. And here's the way it works. Basically, here's the way it works: is identify where I believe technically the price action will go down to and stop and turn around. Then I put a stop limit order just above that to buy the ETF moving back up. I identify my profit targets, T1, T2, T3. And so how did that work out today? Let's have a real quick look. That was on LABU. So on LABU, I had identified, and let's just grab this really quick. be able to read this. Okay, LABU. I basically said that at 67.30, which 67.30 was just dropping, it was halfway in between the 50-day 50% retracement and the 318 or 618. Yeah, I think it's 618 right there. Halfway in between, did a rebound and came back up, and it bought us in at 67.42. So well done. We finished the day at $70.80. Now these are all conditional orders, and so literally, the active trend traders who do the autopilot trading, they put in their orders on Sunday night and let the orders take care of themselves. That way, if you're working full time, you have protection because you have a stop loss in place, but you also have an opportunity to sell it when it hits your profit targets. If you want to know more about that, either send me leave a message down in the YouTube channel, or hey, my email is there, and also there's a link. Hey, try it out for a couple of months. The autopilots start out at like about $20 if you just want to do the top 5 stocks, and if you want to do both the ETFs and the top 5 stocks, I think it's about $45, but it's a special deal to get you in. So if you want to do that, get in while the special deal. So I wanted to show you that just in case you're ever, saying, well, I wish I could figure out something to trade. We always have at least 7 trades that we put on every week with either top quality IBD stocks or these top shelf ETFs, either the leverage ETFs or the straight ETFs. And so I just wanted to share that with you. And so let's go ahead and call it a day. Let me find my sheet here. Again, I hope you're basically having a really great week. We have been having a lot of work done here at our house. And so until later, this is Wednesday, the 16th of June. And so I'm looking forward. Please register, get on board to watch on how to make money trading stocks and options. That is our free webinar on Friday, 11 a.m. Pacific time. There's also a link in the description how to do that. If you're not a member or subscribe to our YouTube channel, to my YouTube channel, please subscribe, hit the bell, leave some comments about what kind of stocks you would like us to review, or if there's a potential stock you would want us to review on at one of these sessions of On the Radar. And so until later, one last thing. Share this with somebody else who likes to trade and likes to trade stocks or wants to learn how to trade stocks. I'd really appreciate it. So aloha and God bless everybody.